If you're learning how to trade, you don't understand this one concept, then no matter how good your strategy is, you will continue to lose trades and blow your accounts. In this video, I want to share you exactly what helped me go from an unprofitable trader losing $250,000 to becoming a profitable trader that is consistent month on month. So in this video, we're going to be talking about risk management. Now, risk management is super important because most people understand what it is, they don't know how to use it properly in their trading, which is the most important thing to do. So in this video, we're going to be talking about how I use risk management. We're going to be talking about risk management as a whole and how you can use it to become a profitable trader. Actually have data backed by your trades to prove your confidence in the markets and to prove your consistency with your strategy as well. So without further ado, let's get into the video. So today we're going to be talking about risk management. Why is it so important? Guys, our number one job as a trader, believe it or not, is not to make money. It's to protect the money that we already have. So without capital, we can't trade. If we don't know how to protect our capital, we will lose our capital. No matter how good of a trader we are, no matter how good our strategy is, we will lose. And the reason we will lose is because we don't understand how to manage risk. And risk management can be talked about in several ways. From trade management to the risk that you're taking per trade. There's a lot that goes into this, so really listen closely and this will help you so much. So the first thing we want to do is keep our losses small. Not necessarily small, but consistent. Or at the very least, have the same risk every single trade. So if we enter a trade with an entry and a stop loss, we are comfortable with that risk. That is, let's say 0.5%, 1%, 2%, 3% of our accounts. Depending on how we're trading, if we have a personal account, up to 5% is acceptable risk. So let's say we're trading funded account 200K, 1% risk, done. 1% risk, that's it. That's the most we are willing to take. Knowing that if we jump in with a 100K account, 1% risk, that's $1,000 that we have at risk. We need to be comfortable with that amount. We need to be comfortable and also keep that consistent. Don't think that because we lost a couple trades that we need to go to $200 risk, $300 risk. No, keep the risk the same. If we're staying at the same risk, that's how we build consistent profitability over the long run. Don't go through a bit of a losing streak and then lower your risk and think that, we're just going to build it back slowly. No. If you're really confident in your strategy, you should not ever lower your risk. Keep your risk the same. Same on a winning streak. 1%, let's say you made 4% profit in 2 trades. Don't then go risk that whole profit just because we're on a hot streak, because we'll lose that trade. Stick with the 1% risk. I know it's hard to do, especially when you go on a winning streak. Guys, we should double the risk here. We're making money. No, don't do that. Stay with the same risk, consistent risk throughout. That is the best way to go about this as a trader. So first thing again, keep your losses consistent. This again will remove your emotions somewhat. It's the first step in removing emotions as a trader. Because if we're confident with the amount that we have at risk, or we accept that going into a trade, we shouldn't feel that up and down emotional feeling. If we lose a trade, it's just a loss. That's all it is. We move on to the next one. That's how we need to treat trading. If we're treating trading like a business, like we should, like a business, then that's how we're going to make the most success as a trader. So again, if we're keeping those losses small, we're protecting our capital, we're removing those emotions. Protecting capital can be done in several ways as well. We can move our stop loss to break even once we hit, let's say, a 1-to-1 risk to reward ratio. We can do a lot of different things, or price takes out a new high. We can definitely do a lot of things with risk management as well. Protecting capital though is number one. Be confident with the risk. Protect your capital once you get into a certain amount of profit by protecting those stop loss. Move your stop loss to break even level or in profit. That way we can't lose money on a trade. Just thinking about protecting capital as number one, most important thing as a trader. Because if that's our focus, then we'll do everything to protect that. If our focus is not about protecting capital, we're just going to let trades do whatever they want to do. Price will go into profit and it'll go straight to our stop loss. We look back at it and said, well, we should have protected our capital here. We didn't. Greedy, whatever it might be, might come in and cause these kind of emotional reactions when we are trading. What it's going to do as well is build consistency for us, because as a trader, it's all about consistency. Consistency in the strategy, consistency in the setups, consistency in the game plan, consistency in the risk management. If you can master these 4 things, stay consistent with these 4 things, then you're going to be very, very successful and you're going to be on the very good path to make trading a full-time career for you. So again, small risk per trade. 1 to 2% is a guideline. Of course, if you're trading on, big size funded accounts, you have $1 million in funded capital, you probably go down to 0.25%, because you're still risking $2,500 per trade, but you're spreading it over, let's say 200K accounts. So you're really lowering that risk. You're lowering the risk to a point where each account has $500 at risk. Where's the emotion? You've got 40 losses just to lose that account in a row. Where's the emotion? Just trade confidently, keep the risk management tight, and you're good. Again, if it's a personal account, your own money, I think 2%, 3%, 5%, depending on how confident you are and what your win rate is and what your data says about your strategy. For me to lose 20 times in a row, I have to be on drugs or something, like a lot of drugs. Because 5% risk, 20 trades in a row to blow the account. You may lose 5, but over time you're going to be profitable. So even if you're losing trades, it's going to be profitable. So whether it goes into drawdown or not, usually you're going to be in profit. If you're a good trader, be in profit. You go through a losing streak, you're losing some of your profit. I think that's what's powerful as well, is that once you start making money, you guys will get to this point, once you start making money as a trader, you get to a point where the profits start to accumulate. And now because your profits are accumulating, you're always in the green. So even if you lose a lot of your capital, a lot of money in a short period of time, you're still in the green. So you're still winning. And that's a powerful thing to come in with a mindset of. So you pre-decide exactly how much you're willing to lose if you're in the wrong on a single trade. So typically 1 to 2% of your account on average. But when I say 1 to 2%, you need to be strict on what you want to risk. If it's 1%, it's 1% every single trade. Not 1%, 1%, 1.5%, 1.6%, 2%. Always keep it the same. Now, you want to match that position to your stop loss, of course. If your stop loss is 30 pips, your lot size is not going to be the same as if your stop loss was 50 pips. If you use a lot size calculator and calculate the risk for, let's say, 1% risk with 30 pips, 1% risk on 50 pips. Again, what actually can help you a lot is if you have these written down. So if you're trading one pair, let's say you trade gold, have the stop loss sizes for 15 pips, 20 pips, 25, 30, 35, 40, 45, 50, written down. It could even be written in your notes. And before you take a trade, you calculate your stop loss. Instead of going on a lot size calculator, you quickly check your notes. Maybe you have a sticky note, piece of paper, a journal there. You see lot size, enter, done. That's a quick way to do it. Then it saves going back and forth between all the apps. You can get the quickest position that sometimes your strategy requires. So obviously you're going to pick your risk percent and stay consistent with that. Mark your stop loss by logic, not by what you're comfortable with, of course, right? Your stop loss covers previous low, for example, like making sure that we've covered enough on our stop loss where if we're going to get stopped out of the trade, we are wrong. And that is super, super important, something that will help you a lot as a trader. Of course, you want to calculate your position size. I've just given you a tip of how to do that much quicker. And of course, automating the safety. So protecting the capital. If you get into a certain amount of profit, let's say your target is a 1 to 2, price goes 1 to 1, it's just broken a previous high, we're going to move our stop loss to break even. That way we can't lose any money on that trade. If price comes back to break even level, we get stopped out, we lose nothing. We continue on with our day, that's it. Then if the trade keeps going to the profit, we hit our target 1 to 2 and we're good. That's my risk management strategy. I'm a 1 to 2 risk to reward trader. So again, protect capital first and grow second. This is key as a trader. If we're protecting our capital, it gives us room to grow. If we're not protecting our capital, then the growing is going to take a lot longer because you're not doing anything with your stop loss, or you're just having losses that are unnecessary, and this is just going to ruin us as a trader. Upping the risk, very much going to ruin us. Number one job is defense. So just like we have a basketball game or something, you have defenders and defense and offense. We want to play defense. We want to be in a position where we can protect our money at all costs and be in a good position to do so. So again, capping how much we're going to lose in a day or a week. For me, that's not something that I particularly do. However, what I will do is I'll cap how many trades I can take in a session. Because I trade the first hour of London session and the first hour of New York session, and definitely prefer the first hour of New York session because I'm primarily trading gold. What I will do is I can only take one trade each session, maximum. Most of the time, I'm only taking one trade per day, but maximum I'm going to take one trade per session. What that does, protecting my capital again, not allowing me to get into bad habits like revenge trading or taking too many losses. Because I see time and time again, traders will lose a trade. I have a prop firm, Funded X, one of the biggest prop firms in the world. What we're seeing is most traders lose via daily drawdowns. What that means, they'll take a trade, they'll lose. They'll revenge trade, they'll lose. They'll look the trade, daily drawdown hit, blow the account, they purchase another one. This is the mindset how people go into their challenges these days. And it's because you see all the way over social media. It's why I don't really like posting too many profits all the time, is because you see profits, funded account, payouts, this, that, from all these thousands of people out there. And while that is good, you coming into a challenge, you might be thinking, well, I need to pass now because I see this guy got a payout, I see he passed it quickly. Take your time, run your own race. Don't worry about what anyone else is doing. Just focus on you, take it slow. Protecting capital is number one, making sure that A+ trades are being taken every single time. So again, the daily or weekly loss cap could be a maximum trades per session or per day cap. I think that's a very good way to go about it. This goes without saying, guys, never add to your losing trades, never average down. Just because you're in a drawdown, don't still think that price is going to do what you want it to do, because there is no guarantee in the world that price will do that. If you're in a drawdown, do not add to your position, because you are going to take much bigger loss than you would take if you were, let's say, risking 1%. You hit the loss, 1% loss. If you double down, 2% loss. For what? 2% on one idea? That's double your risk. That's stupidity. The only way you would average into a position is if you're already in profits and secured your stop loss at break even. It's not something I do, but it's something that would be logical, because if you accepted the risk at 1%, you've secured your stop loss. If there is another valid trade and you wish to take that, you're still only going to lose 1% on that idea, which is good. You're not going to lose 2%. Make sure you don't move. You make sure you stick to that break-even rule as well on that first position. But if you're doubling down into a trade, another valid entry, again, not adding to a loser, but you're already in profit, secured break-even or partials on the first trade, then you can enter that second position. And of course, you're still risking what you would if you had lost that first trade, which is fine. Now again, securing partials. So you can do whatever you want to do. Some traders secure partials at 1R, 1.5R, 2R, they might secure partials. I have students that secure partials at 2R, and they let the rest of the trade really run and just see how far it's going to run. 1 to 5, 1 to 6. It depends. You have to find what works for you. For me, I'm not a partial taker. I don't like taking partials. I like to close my trade and take my money. So basically what I will do is I will secure my money. The earliest I will secure it is about a 1 to 1.5, but I go for a 1 to 2 target. Now, usually we'll target on my trade itself about a 1 to 2.1, because then with spread and commission, you're still going to get that 1 to 2 risk to reward out of that trade. Now, break-even discipline, like we spoke about before. Don't think that price is going to tap your break even perfectly and go to your target. I'm sure this has happened to you before. It's happened to me before, but it's rare. Break even is there to protect us. Think of it like that. If you have a trade, it goes into profit, takes out a high, goes 1 to 1, whatever your risk management strategy is, and then price goes break even after that, stops you out, but then goes into a little bit of drawdown and then to your target. What can you take out of that? You can say that you followed your rules and you followed your plan, because that might have happened then, but then you do it another 3, 4, 5, 6 times. Maybe every time price will go drawdown and then hit your stop loss. So you guys understand, very important to have that discipline with your break-even strategy, and you'll go a long way. Again, taking A+ setups is super important. So clean but fewer setups. Less is more. Don't think that you need to take a trade every single day. I took one trade on Friday, it was a 2R trade. I took one trade on Monday, it was a 1R trade. I did not trade Tuesday, and I did not trade today. Even though we were very close to having a setup, I was on a live session with my team, but we did not take the trade because we just missed that last confirmation to get in. As you guys can see, I'm up 4R since Friday. 4R, and I'm going to come into Thursday now, still being up 4R in a week of trading. So whether I take a win or a loss or a break even tomorrow, I'm still up 4R in a week. That's powerful, right? Because my risk management is on point. I take very good but few trades. Clean setups. Trade less, you will make more. So prove the edge small. Again, how you can start, use a demo or a small live account till you can prove your consistency. And obviously you can scale from there. Get funded challenges. I recommend FundedX as the best prop firm in the world. Other than that, I do recommend a small live account, very small money you can afford to lose. Just to start with, you can always scale both of those as well as you go. So 3, trading less equals less stress. Now, I've gone through this before. The less we trade, the more strict we are with our rules, with our confirmations, with what we need to enter a position, the less we will be stressed. If you're taking 3 or 4 trades a week, you're going to be less stressed than someone that takes 15, 20 trades a week. I mean, it goes without saying, right? You're putting yourself in a stressful situation. You've got money at risk. If you're taking 15 to 20 trades, how can you think logically about, is this trade A+? You're just going to take that trade because you know, it's Monday, I've already taken 2 trades. I've got, I might take another 20 this week. It's a bad mindset to have because you're just going to take unnecessary trades that might not have every confirmation for you to actually get in. So think about it like this, that trading less will bring you a lot less stress. But if you're taking clean A+ setups, you'll be a lot more profitable than someone that's trading every day, several trades a day. So, like I explained, fewer high quality decisions, you're gonna have a calmer mind, you're gonna be better with your execution, and in turn, your results will be a lot better as well. So what we wanna do here is narrow your universe. Pick 1 to 2 instruments. I recommend 1 instrument for sure. Trading 1 session, London or New York. Now, this is not both. The way I trade is I trade 1 hour in the London Open, 1 hour in the New York Open. So more of the time I'm focusing on that New York Open because I see the setups be a lot cleaner. The manipulations are a lot cleaner on gold as well. And that's just something that I really enjoy trading basically. So focusing on that New York session, again, 1 hour a day is enough to really have a consistent income, to really scale funded capital, to really scale personal accounts. And I've seen it for years now that, this is the way to trade. Less is more. Don't spend more than 1 hour in one session, trading session on a chart. So 1 hour, you're focused, whatever time that is, Asia, London, New York, whatever. 1 hour on the chart. Then you go another session, 1 hour max. That's it. Go away, walk away. If you don't have a trade, don't try and find one in the next hour because be strict with that. Less is more. Talk about time on the charts as well. Now, hard limits, of course, so maximum trades per day that you want to take or per week, or maximum losses that you want to take. Personally, I don't think we should ever go with maximum wins, maximum losses. I think we should trade our times and our days that we want to trade. And if there's a trade, take it. But of course, limiting the amount we can take. So for me, it's 1 trade per session. If I take a trade London, I can't take another trade in that first hour of London. If I take a trade New York, I can't take another trade in the first hour of New York session. A+ filter, of course. So when all the criteria is lining up for us, that's when we can take a trade. That's when we should take a trade. Other than that, we need to step away from the charts. Block out time to focus on other things. We're traders so we can have freedom. We didn't become traders so that we can work 8 hours a day on the charts. No, freedom comes first. Second is trading. And of course, if you're learning, replace the screen time with study. Even myself, I still backtest. 8 years in, I still backtest the previous week because it just gives me so much confidence in what I'm doing and the profitability of my strategy that it is just perfect. So, risk management table. Now, this is just a basic risk management table which shows you what you require to be profitable with the risk to reward ratios. So if you're using a 1-to-1 risk to reward ratio, you can see that you're not going to be break even until you're hitting 50% of your trades as winners. And of course, 60% you become profitable. At a 2-to-1, which is what I trade, I require a 40% win rate to be profitable. 30% I'm not profitable, right? So I need 40% or more at a 1-to-2. Now that gives me confidence. That means that out of every 10 trades, I only have to win 4 to make money. Nice, right? Powerful. Gives me confidence coming into trades, knowing that I can lose 60% of my trades and still be a profitable trader. That's a powerful thing. It makes trading look easy when you break it down like this, right? Because it is. You guys just don't know it yet. 1-to-3, you're profitable at a 30% win rate. You can lose 70% of your trades and you're still making money if you go for a 1-to-3. If you're trading let's say a currency, for example, or even crypto, which moves quickly. A 1 to 3, you can get very, very quick. And these trades can be like that. Even gold, that. Beautiful. At a 1 to 4, a 20% win rate, you'll break even. That's crazy, right? 30% become profitable, and even less than 30%. And of course, the higher your win rate, the more profitable you're going to become. At a 1 to 5, where 20% win rate is actually profitable. So you can lose 80% of your trades if you're going for a 1 to 5 risk to reward every time with a full TP at 1 to 5, then you only need a 20% win rate to make money. And that's crazy. But of course, find what works for you. I can tell you what works for me. It's a 1 to 2. It's going break even after a 1 to 1 or a structure break, or price breaking a previous high or low, small high or low that's close to my entry. That's how we're going to do it. And I go for a 1 to 2, and I'll close the whole thing at 1 to 2. Very rarely, if my target is maybe 1 to 5, 1 to 6, 1 to 7, very rarely I'll close early. But most of the time, and that's if there's no real reason for price to go much higher or lower. But most of the time, we're just going strict 1 to 2. So for me, based on the small amount that I might close something early, requires about a 45% win rate to be profitable. 45% win rate on a highly profitable strategy, very, very easy to do, because consider as well that you're going to have a lot of break evens. You might have 4 wins, 3 break evens, and 3 losses in a 10 trade sample, but you're profitable. Nice. That's 10 trades. If you do that every week, what's that? 1% profit per week. You beat the hedge funds. Think of it like this, guy. You're doing 4% a month, 5% a month. You're beating all the hedge funds in the world. You don't need to be doing 10% months every month. Take it slow. The months are long. They're long months. Take it slow. You got this. Find what works for you in terms of risk management and stick with that. Don't go. Sometimes you go for 1 to 2, then you're going to go for a 1 to 3, then you're going to go for a 1 to 4. You lose the edge. You lose that. You need to have something strict in place like this. You have a strict risk to reward ratio. Dynamic. Look, some weeks are going to be huge. Some weeks you're going to be scratching your head and pissed off. And I should have closed it all at 1 to 3. Just have your rules in place. Backtest your data. Show yourself why your risk management makes sense. And it might even be a case of actually 1 to 5 is more profitable, guys. But my mindset is I don't like a 1 to 5. I'm just speaking in a general sense. I don't like this. I don't want to hold for this long. I don't want to have to guess myself where to close partials. In fact, I like a 1 to 3. It's clean, it's easy, it makes sense, price moves there quickly, and that's what I'm going to do. So do that. Do what works best for you, because if you're not doing what's best for you, especially with trading, you're going to lose that focus. You're going to lose that mindset coming in, and it's going to very much affect you. So the moment we do that, go back to the roots and focus on us, is the moment we start making the most money. It's the moment where trading becomes easy, and it should be easy. For me, it's easy. Sit on the charts, take a trade, one trade. I know it's going to be a good trade, because if I take a bad trade, I can't take another trade. If I rush a trade, I can't take another trade. It's a good trade every single time. That's what I need to focus on, and that's what I do. So guys, if you want to learn how you can stop second guessing every entry that you make, finally hold trades with confidence, knowing why you're in and where you're going, and trade with a repeatable plan, not emotion or guesswork, then join the Currency Squad. Full free course is down below. First link in the description. Check it out. If you do like what you see, we can book a call with my team. And guys, let's build something crazy together. I can't wait to see you. Can't wait to work with you. So let's get it. Thank you.